Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 16th. My name's Eric Wolkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Anyway, having that out of the way, let's get this on. Happy synthetic Wednesday, if you will, since we had a extended weekend. Monday we had off. I hope everybody had a great extended weekend there. But getting on with the markets, one of the biggest things that we saw overnight and going into today was Saudi Arabia, Qatar, Venezuela, Russia, all supposedly agreed on an oil output freeze. Now, that's all well and good, should drive prices up. As you can see on the chart, we did have a spike up into the 30s earlier on this morning. But you have to look at it, what Iran isn't going to agree to that. And if Iran's going to keep pumping it out while they shut off the spigots, they're going to be looking at it like they're losing money, because Iran's going to probably put about as much out there as they can, especially if the rest of OPEC decides to try and put a freeze on it. That's not going to really help them out in the long run. So don't really believe that hype, and the overall market is starting to fade that. It was kind of a euphoria this morning and the market really rallied, but since then everybody's like, hey, there's still one thorn in the side of this whole thesis, and that is Iran. So the market has come off. Only economic data we really got today was NAHB housing index, and that came in a little bit lower than expected. But the biggest one that was a surprise to the downside was Empire State Manufacturing. Was supposed to come in at negative 10.5, came in at negative 16.6. So that continues to slide and has been down for several months now. So really starting to look like that thesis of worrying about the recessionary things to come. You know, even a lot of the Fed governors that were pretty hawkish, wanting to raise rates and continue to do that, are now in the camp that they don't really see them raising rates anytime soon. And a lot of the rhetoric going around is negative rates, which is really bizarre that these guys are really flipping. Maybe the light bulb's gone off and they're seeing that we could be going into a recession and they're going to need to do something. I don't really want to see negative rates. I don't think anybody necessarily does, but it is what it is. If we get negative rates, a lot of these companies are going to really seriously start doing buybacks, and that could drive the market higher, but we're creating a lot of risks there in my eyes. Anyway, that's /CL. On to the markets here. NASDAQ continues to lead the markets. This is /NQ, which is the E-mini NASDAQ. They are charging higher at, being up about 77 points here. The E-mini S&P chart, as you can see right here, this is /ES, and we are pushing higher, about 27 points higher on the day. Quite a bit off the highs, though. Earlier this morning, we really ratcheted higher, but the number has put a bit of a wet blanket on it. Not really enough to push us negative. You can see we have come off our lows since that economic data point, but the overall market kind of having an inside day from what we saw on Friday. Still above the last several days' value area. This has acted as support. This is the value area high of the last several days compiled, and the market is wanting to try and push higher. If it settles below this value area high, then that's going to look like an intraday sell. On to things that I've done. I rolled down my GoPro. Yes, this is a losing position, and in GoPro I just rolled it out in time, collected another 30 cents, so now I'm in the march for that position. I needed to get up here into the 20s really for that to be a winning position, but it looks like it's really found support here. At the end of the day, they got to be close to being around their book value for all intents and purposes. So, I'm going to keep this going out, and if they get a bit of a pop, then that'll be good for me. Otherwise, I'm going to keep trying to collect some premium on that, lower my overall cost basis on that to become profitable. I got a great question just about this. What do you do to avoid assignment risk? Well, one thing that you cannot do is avoid early assignment risk. That's just kind of a luck of the draw. They spin the wheel, and whoever lands on it gets that early assignment. If somebody decided to exercise their right for the premium sellers, we have to obligate that right. So that is a really good question on what happens when you're being tested on something and having to worry about being assigned. Can't do anything about early assignment other than you take that stock, either get out of it or you start selling calls against it to reduce your overall basis. In the when you haven't gotten that early assignment and you're worried about at the last days going into expiration that you're going to get assigned on that, you roll it out in time to the same strike, collect some more premium, and get that extrinsic value to decay. And if you get a pop in it, then you can recoup some of your losses, which is what I've done in Twitter. And we've had a few days of rally in Twitter, so that's really helped me out as well from rolling that out in time. Another trade that I put on today was JP Morgan. Now, if you know and watch many of these daily market commentaries, you know that I have on Goldman Sachs, and I am synthetically long Goldman Sachs by selling puts against that. Well, I kind of created or sold a put spread, I should say. Now the market's really rallied off that. Goldman Sachs has been a nice little winner, and I looked at creating an iron condor by selling some a call spread in Goldman Sachs, but it just hasn't given me the premiums for what I'd like to see on that and the strike location. So I kind of went into JP Morgan and a couple of the other financials and decided to sell against that, because if the interest rates aren't going to rise, these bank stocks are going to be hurt by that. And since we've gotten a little bit of pop here in JP Morgan, I decided to go in there and sell a call spread. And I did the March 62.5 call spread and collected 81 cents. Now that one was pretty aggressive. I looked at the 62.5, 65 call spread. It just wasn't, the premiums just weren't there to get a third of the width of my strikes. And this one, I decided to go a little bit more aggressive because this is going to act as resistance as it acted as support on the way down. So that's why I ended up going with those strikes. And in UAL, if the overall market's slumping, or the overall economy, I should say, is slumping, oil prices will increase their profit margins on this, but if nobody's traveling, it doesn't do any good. And from what I'm hearing, a lot of the, even on this holiday season, the airlines still had empty seats in some regards. So that does not bode well. People aren't traveling on holidays, and on these extended weekends, that's not going to look good for their profit margins. So they really have to sell out all of their seats in order to be profitable. Therefore, I went into this, and as you can see, this 50 area acted as support on the way on the bouncing here. We busted right through it on the fourth time through, but now we've gone up and tested that, and it just seems to want to fade away from that 50. So I ended up going with the March, again being a little more aggressive than normal, sold the 50, 62.5 call spread and collected 94 cents for that. So it was pretty close to the at the monies on that one, but I decided to go with it because that was a nice really line in the sand at those 50s. So we'll have to see how that works out. That's all I got for you guys today, other than Friday's webinar went off really well. We got a lot of great questions on that, and you can go to ProTraderStrategies.com and check that out. It's about all this volatility crush, and when the crush happens, that's when you make your money. When you start seeing these real fall-offs in the volatility, that's when those premiums come in. So if I can get a bit more of a vol crush on this and a sideways to downward move, I'll be able to collect those premiums relatively quickly. All right, go to ProTraderStrategies.com. Check out the last couple of webinars we did. You know, we have one on covered calls, which will really help people out if you get assigned, and how to lower that overall basis. The idea is if you can sell calls against your long stock, it takes about a year and a half where you actually have that stock on for free if you continually sell those calls against your position. And check it out for Friday's webinar coming up. That's all I got for you today, other than if you can't take that, take it easy.